Well, here's something the mainstream media is going to totally hide from you, just like they did the Hunter Biden laptop and the banking crisis. It's the banking crisis in the United States is about to get a whole lot worse. You better buckle up and protect your family right now. As economist Jim Rickards says, we are entering phase 2 of this banking collapse right now. If you've read Jim Rickards' great works, Road to Ruin is an absolutely eye-opening book, and he is a brilliant man. Banking crisis stage 2, he writes. And he dives deep into how this all unfolded. So let's take a step back here a minute and look at phase 1. As Kevin Demerit of Lear Capital and I talked about this last week here on the show, Kevin was talking about how so many of these commercial loans started coming due, and it's been destroying these small banks. Because obviously people are coming in, they're like, going to refinance them, but people are not going to refinance into higher interest rates. And so a lot of them are right now being squeezed. And you're going to see a lot more bank failures, hundreds of bank failures. And it all started, if you'll remember, on March 8th, 2023. Most people think it actually started on March 9th because that made more of the headlines, but it didn't. Actually started the day before with a small bank, Silvergate Bank, and that bank collapsed. But it was eclipsed by the following day, of course, by Silicon Valley Bank, which collapsed, and then a bunch of other banks that weren't as publicly talked about. But on March 9th, the FDIC said that indeed all of those excess deposits were uninsured. So, more than $250,000 in these accounts, we can't cover it. We're sorry about that. That's just the way it goes. That's what the FDIC is there for. We insure anything up to $250,000. Well, guess what? A lot of these, Silicon Valley venture firms had their money, they have millions in there, wiped out. Sorry. Well, then they came back a few days later on March 11th, and they actually said, sure, we will insure all of those losses. Wait, what? Now you're going to insure all of them? How are you going to do that? Janet Yellen comes out and says, yeah, we'll cover them. The Treasury will cover it. Don't worry about it. $1 trillion? Okay, how's that going to work? Well, it's being called the mother of all bailouts, as Jim writes here. That Sunday night, they also closed Signature Bank, a New York-based bank with crypto links. The damage wasn't done. On March 19th, the Swiss National Bank forced a merge of UBS and Credit Suisse, one of the largest banks in the world. Credit Suisse was on the edge of insolvency. Finally, May 1st, First Republic Bank, with over $225 billion in assets, was ordered closed by the government and sold to J.P. Morgan. It was the mother of all bailouts, and it seemed to leave stock market investors unfazed. The issue was and is, once you've guaranteed every deposit and agreed to finance every bond at par value, what's left in your bag of tricks? What can you do in the next crisis that you haven't already done except nationalize the banks? Phase 2, nationalizing the banks.
I see where you're going here.
That's coming. And if you'll recall, they did this same thing back in the Great Depression. 9,000 different institutions wrapped up, closed up, swallowed up, and nationalized. So
that's the opposite of Bitcoin. What we're going for.
Oh yeah,
with Bitcoin.
Exact opposite.
That's not the thing.
And it's absolutely terrifying. And by the way, guys, how many of you watching right now don't think that this is fully orchestrated? Fully orchestrated. When you have a financial collapse of this magnitude, where you can't use your cash, you can't use your banks, here's your central bank digital currency to fix everything. So Jim Rickards sort of asks, what's left in your bag of tricks? You've already literally financed every bond at par value. You've guaranteed every deposit. You have nothing left. Now phase 2 begins. And nationalize the banks, force everyone then to go into a central bank digital currency that we control and know every transaction and take away your cash. That's exactly what's coming. So phase 2 is coming right now. So you had 5 bank failures at that point, $1 trillion bailout by the government. The crisis seemed over, right? Seemed like it was fine, Jim says. But that was false comfort because that was just halftime, as he writes. as investors are totally relaxed and think, oh, the crisis is over. And then you have CNBC running sort of retrospectives, right? About a year ago, remember that Silicon Valley Bank? That was a one-off, right? That was just a one-off. Watch.
Do we have enough time now to say that it was kind of Silicon Valley's problem? I mean, it was more of a one-off than it wasn't it, Leslie?
Yeah, it's kind of remarkable, Joe. I think we could probably say that, although, of course, we're seeing cracks form once again a year later.
Yeah, we could say it was a one-off, but, Joe, we are starting to see a lot of cracks. You know, like if you were standing next to a giant aquarium.
Just a long series of one-offs. That's what we're coming into. Just so they're not connected. They're just one after the next, after the next, after the next, but just one at a time. One at a time. Sometimes two at a time, but they're each one at a time. Like, come on.
It's unbelievable. So it's a huge mistake. And history shows us that major financial crises unfold in stages, as Jim writes, and have a quiet period between the initial stage and now the critical stage, phase 2. CNBC just revealed how regulators are now going to go out to these small banks. They're already going out to these small banks, and they're telling them, hey, we know you don't have enough money on hand right now. We also know you don't have enough money to cover what's on your books right now. And you better get some money. You better get some capital in here real soon, or you're finished. Watch.
Hundreds of small and regional banks across the U.S. are feeling stressed. More than 280 banks face the dual threat of commercial real estate loans and potential losses tied to higher interest rates.
There's no doubt in my mind there's going to be more bank failures.
Or at least dip below their minimum capital requirement.
There will be bank failures, but this is not the big banks.
Rapid interest rate hikes can mean borrowers suddenly face more expensive loan payments. And if they can't afford to pay up, they may default on their loans. A record $929 billion worth of loans are coming due, aka maturing, in 2024, driven by mass extensions of loans originally due in 2023. Regulators are working behind the scenes with potentially at-risk lenders.
Listen, here we go.
Sort of confidential, under-the-radar reports saying you got to raise your capital.
We'll see a lot fewer bank failures than we would otherwise if we're successful in attracting private capital to recapitalize these banks.
These are banks that probably need to raise capital, or they could try to get acquired by a stronger bank.
Yeah, see, did you hear that? So regulators are going out to these smaller banks. We know you're undercapitalized. And what about a private, a bailout? AKA, we buy you out. We take over these banks, swallow you up.
Do you think, and a lot of people might, and maybe you'll have to explain it a little bit, but do you think we would be facing this if there wasn't fractional banking? You know what I mean? Like them being able to loan 10 times every dollar that they have. Like, would we,
No.
It would be impossible.
It would be absolutely impossible. So what David is referring to, fractional reserve banking. Up until COVID, banks had to only keep on hand 10% of your initial deposit. So I bring $1,000 into the bank. They had to keep $100 in the bank, okay, operating. And then they could lend out the other 900. Well, when COVID hit, they got rid of those rules. So then you only had to keep 0% of my deposit. So if I, Clayton, brought $1,000 into the bank, gave you $1,000 bank, you could lend out $1,000 for a mortgage or something else out there. You didn't have to keep any of my money, which is why you're seeing all of these situations now where people are going into the bank and they're like, yeah, I'd like my money out of the bank. And the bank says, we don't have your money. We don't actually have your money because it's all a lie. It's all
and that's
a
what
lie.
I'm getting at with my question is so we have the Treasury printing invisible money. They're just adding zeros on a computer that doesn't exist. We have banks lending out invisible money that they don't even have. So our whole economy is built on invisible money.
Yes. Once we took it off the gold standard in 1974, in the early 74 or 72. I'm having a brain fart at the moment. But anyway, once we took it off the gold standard, yeah, that's exactly what happened. It's not backed by anything. It's backed by debt. So it's all a lie. It's all a lie. So stage 2 is beginning, as Jim writes this. Well, it seems that the quiet period is over, and we are entering stage 2 of the banking meltdown. According to the latest data, listen to this, from the FDIC, Many banks could be at risk of failure as unrealized losses reach $517 billion in the first quarter of 2024. That's up from $471 billion in the last quarter of 2023. 40 banks with over $1 billion in assets have already reported unrealized losses higher than 50% of their equity capital. Over 200 smaller banks with lesser assets have issued the same reports. The bottom line is stage 2 of the crisis is here, and the effects will be devastating to financial institutions and the stock market as a whole. So, yeah, get ready. The banking collapse phase 2 has just begun. Which
like you're pointing out, and what they're going to do to try to stop it is come after us for every red cent that they can for us to send back into that system so they can bail them out. We'll lose our homes, we'll lose our assets, we'll lose our money, we'll pay $10 for a $1 hamburger, and they'll take every single dime from us to bail these idiots out that have made these financial decisions for however long this has been going on.
Yes, that's exactly what will happen. Number one is they'll swallow up, the big banks will swallow up all of these small banks, sort of be nationalized, if you want to call it that. That's what will happen. It'll be consolidated. Chase Bank, Bank of America, the big 3 banks will swallow up all of them. Your money will be used to bail in this whole process, and then they will issue a central bank digital currency that they will control. And it will be a Wall Street run central bank digital currency. That's exactly what will happen. So we are here on the tipping point moment, which is exactly why I'm such a big proponent of owning physical precious metals, having silver, having gold on hand to make sure that you're protected against all of these headwinds right now. Jim Rickards in his piece today says the only answer in this is gold bullion. And what he means is not just for you personally, but also for governments. The governments right now that are tying their currencies to gold are actually solidifying their currencies. The U.S. is not. So that's like probably the biggest answer for the United States right now is to go back to some sort of a fractional gold standard for the currency.
Well, the United States can't even answer to where all the gold we had on reserve even is. It was like supposed to be at like Fort Knox or something like that. And then they've said that some of it was under the Trade Center on 9/11 or some stupid stuff like that. It's like, where's all of our gold?